Welcome back to Small Caps. My name is Kerry Stevenson. Today, I'm going to be bringing you an oil and gas company, Vintage Energy. ASX code is VEN. They're listed in September 2018, doing lots of work in the Otway and the Cooper Basins. Joining me is Neil Gibbins. He's the Managing Director. Neil, thanks for joining me today on Small Caps. Great to see you.
Yeah, thank you, Kerry. Pleasure to be here.
Now, before we get started in all the work that you've been doing, both in the Cooper Basin and the Otway, who are Vintage Energy for our listeners out there that may not be aware of who you are?
Yeah, Kerry, we've been listed since 2018, and so we started effectively as a group of ex-Beach executives. Reg Nelson, the ex-managing director of Beach Energy, is now the chairman of Vintage Energy, and so he put the company together back in 2015 and then brought me on board in around 2017, and we started putting together some pretty good acreage around Australia, listed in 2018. And actually before we listed, we drilled our first well and had a success in the Vali Basin and flowed some gas. It was actually the first measurable flow of gas in the basin. And from there, we've also picked up some acreage in the Cooper and Otway Basins, which you mentioned, and had a great deal of success there. But the important thing for our I suppose investors is it's a very experienced team with Reg at the helm. Myself, I've been around the industry now for almost 40 years, and many of the execs that were at Beach during my time at Beach have joined Vintage, and they know how to find oil and gas. And they know how to raise money, they know how to get projects off the ground and get things happening and value for shareholders, I suppose, most importantly.
Well, that's what we'll be talking about today, because it's all about value for shareholders, where I come from. It's interesting. So the executive, the management have all come from Beach Energy. Was there a gap that you saw, or what was the reason for setting up Vintage?
I suppose Reg at the time saw the East Coast gas shortage, and really the dynamic of the industry in Australia for small companies changed quite dramatically with the onset of coal seam gas production. And it really generated those shortages of gas for the East Coast. And small companies years ago used to come in and try and find oil and make money on the basis of finding oil. But this new dynamic in the industry allowed small companies to make money out of finding gas. Years ago, gas contracts were very long-term, low-priced. Now gas contracts can be higher priced and shorter term, and it allows smaller companies to make money out of those sorts of assets. And he saw that opportunity, and we certainly saw some acreage around Australia that gave us the opportunity to do exactly that, get gas into the East Coast gas market.
Yeah, we're going to. I'd like to get a little bit more into the East Coast gas market, because I'm on the East Coast. I know there's an issue, but you've recently had a lot of success. You've done 3 wells, I believe, in the Cooper Basin and 1 in the Otway. They've all been successful. Is that unusual? And what are you going to be doing with those? Because let's just give some background to that.
Yeah, look, we're pretty excited about that. It is unusual in the sense that every well we've drilled so far has been successful, and in this industry, that's a little bit unusual. And I suppose it's a testament to the people that we've got on board here. So in terms of those successes, we've got a gas discovery in the Cooper Basin, or in fact 2 gas discoveries now in the Cooper Basin, and the CO2 discovery down in the southeast. And we're hoping to get production from those very soon. So in the Cooper Basin, we hope by the first half of next year to have our assets in production there. Wow. And the CO2 discovery would be a bit longer term. It'd probably take about 18 months or so to get a plant in place and get production there. But certainly we want to take the company from being an explorer and asking our shareholders for money all the time to a revenue generator, generating some value for our shareholders.
So revenue generator, you said, is going to be coming early next year. Is that right?
Well, that's what we plan to do. We're currently finishing off our drilling program in the Cooper. We had a 3-well program. We're just through the first 2. We drilled an appraisal well on our Vali gas discovery, which was actually probably a better result than the first well on the field. And we've then followed that up with an exploration well not far away from that, Odin 1. And again, that looks like a very good discovery as well, and that can be hooked into the gas system that we put in place to get the Vali gas to market. And the third well in the program will be another appraisal well on the Vali field. And once those are all finished, we'll take a look at the volumes that we've got in that area and how we should develop those gas volumes and see how we can get that to market. And hopefully in the first half of next year, we'll be producing that. And we think the gas, the best way to get that gas to market is through the Santos gas gathering system and take it through Moomba and then to the East Coast gas market. And I suppose that's where you're interested in what's happening with East Coast gas.
Yeah, well, I was wondering because I wanted to ask you what's next in your drilling campaign, which you've kind of got it, but how do you get it? So you're going to do a deal with Santos to deliver the gas from the Cooper Basin to the East Coast, because that's where the challenge is. That's where the supply demand issues are. Yeah,
that's right. So the deal is essentially to take our gas, we'll put in a flow line from the fields through to a connection point into the gathering system. It'll be about 15 kilometres away. If people look at our maps in our investor presentations, they'll see the rough location of that flow line. They'll charge us a processing fee and a transportation fee to get it through Moomba, and we'll sell the gas ex-Moomba to whoever wants to take it into the East Coast gas. And the reality of the East Coast gas market at the moment, it is tightening up. You've got things happening like the Gippsland fields are declining. So you've got a particular shortage of gas in the southern states of that East Coast gas market. And the transportation system for gas is also important. It does cost, a few dollars to get that gas from Queensland down to Victoria when they're short of gas. So it's not a straightforward market to understand, but there are certainly shortages there, and we think we can supply some gas in and make some money.
So it's a really interesting market, I think, Neil. And the good thing with Vintage Energy is you guys have got masses of understanding of how, I guess, some of the challenges that lie in the energy market. And we do have a challenge with that supply demand. But I wanted to ask you just about the Nangwarry discovery, which is a CO2 discovery. It sounds quite interesting. Can you just expand a little bit on that? And how does that fit with that sort of Cooper Basin and the Otway? How does that fit? Is that a separate focus? Is that going to take a little bit longer to deal with? And what's that look like?
Yeah, look, a bit of background on that. So everyone thinks we're smothered in CO2. We're actually not. CO2 is actually very hard to get out of the atmosphere, certainly cheaply. There's not very much of it in the atmosphere. And what we have down in the southeast is somewhere between a 90 to 95% pure CO2 discovery. So there's a little bit of normal natural gas methane with it. So it's quite exciting in the sense that previously there was a discovery down there called Caroline. And believe it or not, it's the most economic well ever in South Australia. It paid the most royalties to the South Australian government, and it made a lot of money for the people that owned it. And it was discovered in 1967 and produced for 50 years.
Wow!
So what we have down here, that field has now been plugged and abandoned. It depleted, but what we have now is something very similar to that in terms of the quality of the CO2, and we think it's actually larger than Caroline, and the potential to supply CO2 to the Australian market, it could run for another 30 to 50 years as well. So it is a gas. If you look at some of the websites in the US about the CO2 supply in the US, there is a shortage of CO2 for various industries. If you drink a Coke or a beer, it's CO2 that's in those products. It's used a lot in food processing, industrial lasers, transporting vaccination.
It's amazing what CO2 is used for.
And it's a very, very important product. And although the Australian market is fairly opaque in terms of pricing and volumes, from our understanding, we could potentially put a 150 tonne a day plant down in the southeast and supply into the Australian market.
Where do we currently get our CO2 from? Is it domestically, or do we bring it in internationally? And how much what's the supply demand for CO2?
Yeah, that's a pretty interesting question. There have been some pure supplies of CO2 in Australia. As I mentioned, Caroline was one of them. There's another well over in Victoria called Boggy Creek that does supply CO2 in a similar fashion, but most CO2 comes as a waste gas from power plants. And that's interesting in itself, in that many power plants now, because of the impact of renewables, those power plants are cycled on and off. So the supply of CO2 is not a continuous supply of CO2, it's only available when those plants are on. And so the advantage of finding a CO2 accumulation is you've got a nice, stable, reliable supply that you can produce continuously. And that's what you don't have from these power plants and waste gases and other industries.
So there's definitely there's quite a strong market for you to develop Nangwarry and take it into production.
Yeah, I think 150 tonne a day would be about 10% of the Australian market. But the other side to that too is, there are industries popping up for using CO2. CO2 is actually a plant food. We need it.
That's right.
A lot of people forget this. We actually need it.
We do.
And we see industries around the world popping up where, for instance, greenhouses now pump CO2 through the greenhouse to encourage growth, so they get better yields from their crops. And so there are those sorts of industries. They're now I think I saw one other paper the other day talking about making polycarbonates or plastics out of CO2 rather than actually using natural gas to do that.
Right.
So I think there's even the possibility of value-add industries for CO2.
What's your time frame on where are you at with Nangwarry at the moment, and what's your time frame for that?
Yeah,
sorry, Neil, and are you working alongside the Otway Cooper? Those projects, is Nangwarry going to be going along at the same sort of pace?
Look, that'll be a little bit longer term than the Vali project. It'll take us a little bit longer to get to market. I would think by the time we press the go button on building a plant, it's probably about a 12 to 18 month period to get that up and running. And I'd say look at those as two separate projects,
right,
rather than allied with each other. They'll have different timeframes, but certainly we're keen to look at all sorts of options on building a plant down there. We've just finished our production testing. That's told us we've got commercial rates. It's also told us that the volume of CO2 is quite large. So we'll start talking to people regarding any sort of non-equity funding solutions to get a plant in. It could be that one of the major CO2 suppliers might want to come in and partner or build a plant, or we could get infrastructure funding to build a plant, or we could do some pre-selling of gas to build a plant. So there are lots of options, and we've already started looking at all those sorts of options.
And that's good for shareholders.
It is good for shareholders, and you probably would have noticed that we've taken on a corporate advisor, Bernvoir, who are helping us certainly with those non-equity solutions.
Well, I have to ask this, Neil, your share price, I don't know, has the market not recognised Nangwarry, or are they not real? Because for me, I always say this to you, ladies and gentlemen, you know this, it's all about management. These guys have all come from Beach Energy, loads of experience. Your share price has not done a lot recently. What do you put that down to?
Yeah, look, it has been a tough period over the last 18 months. I know after we made our two discoveries, our share price was up around 15 to 18 cents. And I think everyone would have seen when COVID hit, it dropped down to around 4 cents. And unfortunately, at that time, we did need some money to do some work and do some testing on our Vali discovery. And it does have that dilutionary effect. But I think you suggested that people aren't awake to the Nangwarry discovery and the benefit that could bring to the company. I think it is a sleeper within the group. And I think that's going to have some benefit on share price going forward. And I suppose everyone's waiting for us to say this is how we're going to produce the gas from Vali and the Cooper Basin, and how we're going to get it to market, and signing some contracts and firming that up. And I think all that news is going to come over the next 6 months or so. And I think that would have an impact on the share price going forward. There's a lot of news happening right now with the drilling program. And I think there's a lot of news going forward on what we're going to do to make that transition from just an explorer to a producer.
Well, as you say, you're going from explorer to producer. You listed in 2018. You've done a heck of a lot of work. And I think people need to understand it's very unusual for every hole you drill to hit gas. And you have done that, haven't you?
Yeah, that's right. And I always say this to people, the group that we've got here, they don't like hanging around. You know, we raised money on our IPO and we spent that money and made those discoveries. And, you know, it's great that we haven't had a failure in terms of the programs that we've put in place. And I'd like to hope that keeps on going. And we want to, bring some value to shareholders. And that's what we like doing. We're actually a group that enjoys the work we do. We wouldn't be here if we didn't. We like doing these things as a group. I think we work really well together and enjoy having that success and making a difference.
I've got two more questions for you, Neil. In terms of what's coming next, what can shareholders expect in the news flow in the coming 3 to 4 months?
Well, I suppose the next well in the program is going to be an important one. We've got the third well on the Vali field. That's probably going to spud sometime next week, and we should get results from that sort of 2 to 3 weeks after that. We'll also be, as part of the whole process of doing that program, reevaluating the reserves on the Vali field. And there'll probably be some increments there. We've found some producible gas in a formation that we didn't book reserves in before this drilling program, and that's good. We'll also be looking at the successful Odin discovery and announcing some bookings on that in the near future. So in other words, you're going to get a whole reassessment of the volumes we've got there. And then we'll be looking at what we're doing in terms of perhaps fracking some of those wells to get them ready to bring online. And we'll be looking at making a decision on what size flow line we put in place to get the gas into the Moomba gathering system and how that's going to be funded. So it's a very exciting, I think, 3 to 4 months, and then probably 6 months on just past that. It'd be nice to think that we'll be producing gas and making some money.
And I think
it's a lot happening in 6 months.
That's a lot to go on at the moment, but you're very focused. I know about that. And I think people don't realise that the East Coast gas supply, it's not at a critical stage, but it's certainly getting pretty interesting, and we do need supply. So let's hope that you guys keep doing it. Final question for you, Neil. Why now for those that are looking that are not Vintage Energy shareholders? Why do you think now is a good time to jump on board?
Well, I think all those things that I just talked about, there's just so much happening in the next 3 to 6 months that are going to have, I think, triggers for the share price going forward. I think it's great. It's a great position to be in, moving from just an explorer to a producer. I think a lot of people see that as important. You know, at the times I've been in a lot of companies at Santos and Beach, and just getting that progression from being an explorer to a producer is really exciting. And I think investors feel that excitement a bit, and they see that excitement in the revenue coming through to the company. And, you know, when you start generating that revenue, it also gives you opportunities to look at the other assets we have in our portfolio, which I haven't spoken about today, but we do have other assets in the portfolio that we'll be looking at doing some exploration work on over the next couple of years as well, and just trying to grow the whole portfolio and grow the business. We don't want to be a $35 million market cap company. It's always been our aim to be up in the 100 to 200 million market cap. That's been our goal. And we're not going to hang around. I think we've sort of demonstrated that.
Well, Neil, I can certainly feel your passion coming through. Reg Nelson is your chairman. I'm sure he's also chomping at the bit to get it up to that 200 million mark. It's going to be very interesting, and you've done so much work in such a short period of time. I think it's fantastic what you guys are doing. I'll be really, really interested to see how Nangwarry pans out. And thanks for helping to supply the East Coast with some gas. We certainly need it.
Yes.
Thanks for joining us on Small Caps today, Neil.
Thanks very much, Kerry. A pleasure.